Welcome to the weekly swing load, September 22nd, 2025. And the market has just continued to rally. We finally had the Fed meeting. They did cut by the 25 bips, which is what people were expecting. And importantly, we'll start with the S&P 500. We'll start with SPY here. We completed week 23 with another new all-time high, another higher high on the weekly. Look at these last 3 weeks. So this week, going back here, the first week of September, was actually a bullish outside weekly candle, right? Made a lower low and then closed as a higher high. I mean, actually pulled back a little bit. Then we had another higher high, and then last week, another higher high. At this point, it's just a matter of time, as we've been saying really for the last few weeks. Just be patient here. You can ride this, make sure you're trailing stops, but at some point, we're going to get the weekly cycle pullback. Most importantly, we still haven't really had what looks like a daily cycle low. I mean, it's possible, right? Like there's a world where this was your really incredibly mild daily cycle low. Where I mean, look how elevated we are above the 10-day moving average, and then it comes down here. So all that to say, assuming this isn't a daily cycle low, Friday was day 34. Now, we did have a 46-day cycle here, right? And so 34 isn't crazy in that context, but it is still very long. You can see back, this was 29 days, this was 25, 23, 29, 19, 30. So generally, something that rallies for 34 days has already rallied for a really long time. So it's very likely then that the when we get the next daily swing high, that'll probably start our weekly cycle decline as well. Now, that doesn't mean we need to have a huge pullback. 5-6% probably is what we get. The low from Friday was $660.37. That's your low on SPY. That becomes your line in the sand. And so let's move. So that becomes your level, right? A close below 660.30, all of a sudden you probably have your daily cycle decline. But unless or until you get that, you can ride this thing. And let's look at the futures. We're recording here right before market opens. Let's look at the 4 hour because I think that's a helpful view. So you can see on this 4 hour chart, we have a little swing high in place. So this number is going to be different than the S&P, but price needs to break back above 667.08 spot 50, right? Like I'll just draw that line here so that's very clear, right? See, very clear here. So this 4 hour candle actually is just tried to poke above that level and wasn't able to make it yet. But that becomes very actionable. If you could trade above 67.08 spot 50, that means you can expect something like this. And this little pullback right here might be over and we're ready for the next leg. So that becomes your actionable level to the upside. So that's the S&P. That's SPY. What about QQQ? Same thing. Closes a new all-time high. The low on Friday was $595.16. So you want to be aware of that. Any close below that is your potential daily cycle decline starting. We had talked about how QQQ was the ratio of QQQ to SPY was starting to roll over. Well, look what happened over the last 2 weeks. It bottomed. That's a really good sign. That's usually pretty bullish, actually. So I want to keep watching this, right? You can see this was just barely a bullish outside candle. This here is a ratio of QQQ to SPY. Looks like it just had a weekly cycle low, basically, right? The ratio that is. So that's really bullish, actually. What about the Dow? So Dow also closing at new all-time highs. The low on Friday for the Dow was $460.87. That's DIA, the ticker, the ETF that tracks the Dow. And the ratio of Dow to SPY is in a downtrend on the daily. That is also bullish, also a downtrend on the weekly. So we had these 2 weeks of rally, and now it's rolling over. These are bullish signs. What about small caps? We had talked about how that wasn't back to all-time highs yet. Oh, there we go. We made it. So small caps have made a new all-time high as of Friday. Everything is opening, everything is indicated to open a bit lower today. which again, you want to watch that level. If we pierce that swing low level, that level for a swing high, that might be the start of your daily cycle decline. So IWM a little different. Friday was actually red. It did make a higher high, but then so this is what you have, what you call a potential compound bullish outside candle. So makes a higher high here, and you expect this candle comes back to finish the job. And so that would be a move below $240.13 is what you'd be looking for. And we have the market starting to open here. Okay, so let's move on to the ratio of IWM to SPY. That is actually starting to consolidate on the weekly chart. That's bullish. Or that is at least not necessarily bearish, right? Like that gives you a bit of a chance. Semiconductors. So doing the same thing as QQQ and SPY. So, but actually Friday was an inside day, still inside the range of the Wednesday candle or the Thursday candle, excuse me. So big gap up, right? After the Fed day. And so this will have to defend that gap. That's very actionable. So the gap starts at $312.36. That's SMH. Dixie appears to be continuing the weekly cycle decline. We talked about how this was probably some kind of like peak, but in reality, what seems to be happening here is this was your peak on week 3, and then you had this flush lower. You had this attempted rebound and then another flush. Now, what would be extremely bearish is if this was actually a new cycle. The thing is, the timing on this would be so weird that this would be a really short 11-week cycle. It's possible. The point is, it's a downtrend on the weekly. You can see next level it's going for is the wick on this thing. So that's 96.22. And on the daily chart, importantly, we're trying to put in a swing high on the daily, right? That's your first, like, look at this, 3 really strong green days. That might be all the rally we get, right? Just like this rally got stamped out, this rally got stamped out, this really small rally got stamped out. So a close below 97.27 is your first step. So like right there, right below there. So that's Dixie. What about the 10-year? So the 10-year peaked here on week 7, which was really a kind of a double top of this peak on the first week. So not a whole lot of upside this cycle. And we're now here on week 25. So kind of similar to the Dixie in that I think, the next level is to challenge this wick. So wow. So that is just below 4% for the 10-year. So just below, so 3.99 is what we would expect to sort of test the bottom of this, because this looks like we're just continuing the weekly cycle decline. Now, the bright spot is it is week 25, so it's not super late, right? Like we've already had a lot of decline. We topped out on week 7, and so I don't know that we get all the way down here. My guess is we get some kind of rebound after we come down here, like maybe make a lower low below this, like just below 4%, and then we get a little bit of a violent bounce. But of course, we're not here to guess. We'll react in real time. But that's the 10-year. And if you look at the daily, again, this is now starting to move a little bit in lockstep with the Dixie. They had diverged for a bit though. Like look at this. This is almost the same chart as the Dixie. You have the last 3 days of a strong green move. Now the Dixie is more bearish because it's a bigger red candle on today, but it's really the same pattern. That's really interesting. So they're starting to converge again. That's something that we're going to watch for. And oil is falling off a cliff again. So on the daily, we just peaked last, so Tuesday, I guess. So Tuesday before the Fed meeting. And look at that, just making, so it is about to sweep these lows here around 61.5, something like that. And if we do that, then that gets us, potentially testing the bottom of the range. So as we've been saying for the longest time here, oil is really kind of a no touch for us. TLT. So TLT looks like it peaked right? Like, so that's the tough bit. You had this nice big move, and it looks like it peaked here last week with the Fed week. This is a bearish outside weekly candle. That is bad news. That low is $88.79. As long as we stay below $88.79, this is a short. This means this is interesting, right? Because this would be moving the opposite of yields. So if this is moving lower, then yields have to be moving higher. That's really interesting. So that's something that we'll watch, right? Unless, because if this thing keeps moving lower, then you would expect the 10-year to have some kind of bounce here in the low 4% where it is. That's okay. So that's going to be a good one to watch. What does the daily say on this one? Oh, wow. Look at these daily candles. Wow. You don't see this that often. These are like really small doji candles. This is really important to watch. So the high above here is, what is that? 89.22. $89.22. So I'm going to watch for that. Cuz if if the yields are going to continue to go lower, then we're going to see a violent rebound here, something like that, right? Like this consolidation gets bought up. Very interesting. Okay, so that's TLT. And TBT, of course, is doing the opposite. So for this one, right, look at these little candles. Wow. Okay, let's move to crypto, and then we'll close out with gold. We'll go faster now. Gold, Bitcoin is starting to Bitcoin is continuing its weekly cycle decline, I think is what I would say. We're on week 24 here, and look at this. This is just a little lower high compared to this. Once we crossed below 114,395. And so my guess is we're going to test the lower end of this range. What is that? So around 107,000. But we're still late in the 4-year cycle. I still expect this to make another significant all-time high, maybe something around 150. And if you look at the daily, this is a daily decline that just started, right? We peaked on Thursday, the day after the Fed meeting. The swing high is active below 116,125. Very simple, right? Once we cross below that, right? We closed the next day below that. We then consolidated the following day, and now we're making those lower lows. We'll probably come back and test this cluster at some point, suck in some more longs, right? Something like 114 and a half, something like that. But again, don't get too bearish. This is actually going to set up a buying opportunity. ETH is in a very similar boat. Week 24. We had talked about ETH. Look, we drew this line and look where we got to. We didn't quite get to that line. Oh, actually, yeah, we didn't. Because this line is just this low here, which is 4,062. How low did we get? Oh, wait, no, we did get there. Wait, that's 4,062, and we got to 4,058. So we did get there. I don't know why that doesn't register. Oh, I see, because this line isn't quite there. So that is that. So remember, this was a bullish outside weekly candle. We've just been consolidating inside its range. We've now hit the bottom end of this range. So there's two things that'll happen here. We either get a violent rebound, or this was the start of the break, and we're probably heading, so I'm thinking somewhere here, like in this range, right? Like, so call it low 37, like 3,700 maybe, is maybe even that low. And that makes sense. That is actually a price that, or an area where there is a lot of memory. And so that's actually not super surprising. But it is week 24. So you wouldn't expect it to decline for much longer in terms of time. And look how elevated we were above the 10-period moving average. We're just coming back to test that. I wouldn't say this is anything to worry about. Gold is, on the other hand, is doing very well indeed. Look where we're at. So we had this high here on week 16, and then this low here just a few weeks later. But then all it had done is consolidated. So if you take that at face value and you say this whole thing is a new cycle, we're on week 19. Now that's not great news, because that means we're kind of mature in this rally. But I mean, you're going to get a pullback of this structure at some point. Like, there's no way this, like, just the way markets work, this isn't just going to continue to go up forever, right? At some point, it's going to go like this, and then we're going to go up again, right? So that's going to be your opportunity. But look at all this consolidation; it's now just resolving up. So this thing is going to go much higher. We are we're moving towards the 8 year cycle high, and so the next round number is obviously 4,000. I'd be shocked if we don't get there before the end of the 8 year cycle. That doesn't mean we don't get a pullback before then, because my thinking is the 8 year cycle tops some point. I guess right. We're already in September, but I could imagine late Q4, something like that. And what month are we on? So we are on it's month 36, right? So this is month 36. Generally, a bearish cycle tops out around month 35, 36, like this one here or this one here, right? Because this one just fell off a cliff after that, right? This one just fell off a cliff after that. This is not a bearish cycle. This is a very bullish. Like look at how we've just left behind these previous peaks. Again, we'll get a pullback at some point, and look how extended we are above the 10-period moving average. So definitely don't chase it here, especially on week 19. But gold is looking nice here, and that means miners are also looking good. And if you think about the ratio of miners to gold, like let's just see, like let's look at the monthly. Still a long way to go. Look at this shelf. We haven't even gotten above this shelf of resistance. This resistance, I should say. Right? Like at some point you would expect to see something like this, right? Like some kind of significant move. So GDX still to go much higher is my guess. Where are we at now though? Let's ground ourselves. So GDX putting in a little bit of a red day, starting a little gap up, now trying to come back. So this gap started at or $72.53 would close the gap here on this daily. If we look at the weekly, wow, I mean look at this. At this point, look at this. This is 5 weeks straight of higher highs. But again, that comes after this consolidation. So this is just a more extreme version of that gold chart. But, at some point, you're getting a little bit of a pullback now. Maybe this is your opportunity. Again, so closing the gap at $72.53, that would be a great buying opportunity. Again, you need to see a swing low there. What about silver? So silver, hi-ho silver. So yeah, hard to give an entry here. This thing is just kind of running away. But your last sort of cluster was down here around 42 even. We'll see how the day kind of nets out. But again, these things are all mature in a weekly cycle. So I would not chase them here. And let's look at platinum, XPT. So platinum at one point just couldn't stop going higher, and then it had this pretty violent move down, and now we're just kind of like building a base, right? Since this move lower, like we've been tracking this, right? So we now have this little peak at day 23, and it's currently day 36. So this doesn't look great, right? Right? Like this could be that this was your little rally, and now this is over. And so your first line in the sand would be 1381, right? That's the low of this candle here. You want to try to stay above that. If you can't stay above that, that's your bad news. What does that look like on PPLT? So for PPLT, that would be remaining above $126.33. All right, natural gas. Let's close out here. So natural gas below a daily swing high below $3.04. And on the weekly, also a swing high. That's bad news, bears. Swing high below $2.86 on the weekly. So I'd stay away from this until it sort of proves itself. Uranium was moving especially because of Oklo, which had a gigantic move on Friday. It's now an inside candle on the daily, I should say. But if you look at something like CCJ, ooh, what is CCJ doing? Oof. So this thing is just, wow. So you have this big green candle on Monday of last week, and then big red candle, but just inside. So we're still just inside a range, right? It's a big range. So it's a high of $86.37 and a low of $78.22. The most relevant thing for today is the low from Friday. That is $82.40. You got to stay above that. You can use it as your stop if you want to try to play this. But if you look at the weekly, right, you had this, okay, actually, this could work, right? Because you had this flush lower, and it looks like we're starting a new weekly cycle here. So this is week 5. And so this could definitely just turn out to be consolidation. So that $82.40 could be a level to play. URA probably doing a similar thing. Yeah, exactly. So URA's got to stay above $45.61. So similar kind of structure. All right, that's all we've got for today. Thanks for watching, folks.